Welcome to Grand Lesson 2. Now this video is going to be all about you. We're putting charts to the side. We're taking analysis to the side because before you go any further in your trading journey, you need to know what field you want to be in. You need to know what type of style of trading you want to be in that particular field. Now, some of you may be saying, I want to do them all. Hold your horses. Pick one, master that, and eventually move on to the next. Like, don't do everything. Now, you can do everything right now as a beginner because you need to figure out which one you like best. And then choose that one, master that, and move on to others if you so please. So, starting off, what type of trading do you think about? How do you think about trading when you're trading? Are you saying to yourself, I'm idolizing the type of style where they say, I just made 8,000 in 2 minutes. Are you idolizing that? That's called scalp trading. That's a scalper. They typically don't leave trades in no longer than 4 hours. But what does that require of you in your time, in your life? It may sound good to you, but can you actually apply that to your life? Because if you're not leaving a trade in for longer than 4 hours or anything, then that means you're locked in on that laptop. That means you're doing a whole lot of analysis and you're just sitting and you're waiting. You're sitting and you're waiting. Do you have that type of time to do that? Do you got family? Do you have a job that needs you? Is your phone always ringing? So yeah, it sounds great to make 8,000 in 5 minutes, but can you do that? If not, scalp trading might not be for you. So now we can move on to swing trading. Swing trading is my type of style. So typically you'll hold in a trade anywhere between like 3 days to 2 weeks. Now, of course, these time frames can all vary. They can all vary. Do what's comfortable for you. But typically, when it comes down to by definition, you may be holding a trade anywhere between 3 days to 2 weeks, possibly longer, possibly less. And I like that style because I can go live my life. I can do my analysis, put my trades in, and go. I don't have to be there all day. I don't have to think about it all day. I can wait 16 hours, come back. All right, let's see where we at. All right, cool. And go do my thing. You may have the time for that. You might have a full-time job and a family and you like, okay, whenever I'm not with them, when I finally do get that time to myself, I can do some trades, put my stuff in, and I could go. That may fit you. Or you might be thinking of a positions trader, a long-term holder. So it might entice you to have the thought of, man, I'm idolizing the thought of being able to say, man, I've been in the market for 5 years. I'm holding these particular trades. I've been holding them for 5 years. They up 6,000%. I have shares in here. I have shares in there. That's typically a positions holder. They're holding for 6-8 months all the way up to years. So now that you have figured that out, now we have to figure out what market you want to be in. Do you want to do options? Do you want to do futures? Do you want to do crypto? Do you want to do stocks? Do you want to do Forex? Now, some of you may be saying to yourself, man, I want to do all of them. Hold your horses. Slow down. Because all those markets can move differently. They can move differently. And then also the way how you use your money and the system of it is a little different. So like I said before, because you are a beginner, you can try them all. Just get some demo accounts and you can try them all. You can get a demo account for trying options and futures on the app Thinkorswim. And if you want to try a demo account for Forex, then you can just simply download Trade Locker, C Trader, DX Trade, MT5, MT4, and you can make you a demo account on there. And same with stocks. If you want to just try out some things, you can go to Trading View, and you can make a paper account on there and trade some stocks. You can go to Robinhood and make a fake account and just try it out. So that way you can see which one you're more comfortable with. You can see what it's like trading with $100, a fake $100, $200 on all of those, and see how it flows. And you can say to yourself, okay, all right, I think I want to do this. But a simple breakdown on each of those. Options and futures operate on contracts. I don't do them, but I know the basics of how they work. So when you're opening up a contract for a specific stock or trade, then let's just say you're opening a stock for Google, and Google is at $50, and you open a 2-week contract. You buy one stock for Google for a 2-week contract. So that 2-week contract is basically saying how long you're going to hold that trade for, because eventually you have to close it out. And the longer you're holding that trade within that 2 weeks, so every day is going to cost you to hold that stock. So if you're saying, I believe Google's going to go up to a certain point, you have 2 weeks to make that happen, and if it goes up, boom, close it out. And you want to do that as fast as possible, because the more you're holding it, the more money it's taking from you. Because like I say, every day you hold it, it's going to cost you. I don't know how much it is, but let's just say it's like $5 a day. So $5 a day for 14 days, you do the math. And not only that, when it comes down to options, at least, whenever you buy that stock, if you have $500 and the stock is $50, boom, now you are that negative 50 until that account closes out, or you hit your profit. So you will only lose that $50. I could be wrong on that, but I do have friends that do it, and that's how they have related to me. And I'm gonna tell you why I said that later on, because Forex works a little bit differently. And futures is a little bit of the same. And from what I have seen of the difference is options, you can have a 2-week contract, but you have the option to make it longer. Those of you that are in it, leave a comment below to let me know if I am wrong, but I believe that is how it flows. But with futures, if you have a contract and it's 2 weeks, you have to close it. That it don't matter what it's doing. And the money system is a little bit different. It goes by points. You can have a micro and I believe a macro. And so what a micro is let's just say you're trading the SP 500 index, and you have a micro account. Basically, every point that it moves up, the price, every point it moves up, you're going to make $5. That's a micro account. And then that's also vice versa. If it go down a couple of points, you're going to be losing $5 every point. And then for the bigger accounts, then it's like every point is like $50. So you can understand how that works. And next is the Forex market. That one I could talk about because, like I say, that is what I do. But still, this is a simplified version. So when it comes down to the Forex market, now you can lose all your money in one trade. And from what I believe, I don't believe options and futures does that. So if you put in on a particular stock and you buy 50 and that 50 is drained up, you just lose that 50. Like I said, I could be wrong. If any of you do options or futures, then you can correct me on that. But I believe that is how it works. That, like I said, I have friends that do it, and that's how they have related to me. But when it comes down to Forex, it ain't like that. You can have $500 and put basically 10 cents on a trade. You can lose that whole thing if you don't have a stop loss in there or have any type of money management on that. And the reason why you can lose all your money is because once it's in there, it's just in there, and it's flowing and it's operating the whole way. But a stop loss, let's just say if it's going down and you have a stop loss in there, then once it hits your stop loss, it'll close the trade out for you. So that's how that works. And also with Forex, you can trade anything on there. Same with futures. You can trade anything. But with Forex, if you trade a stock, if you buy that stock, you don't actually own that stock. It's a different way of buying in on it. You're not actually buying to hold shares or anything like that. You're making money on the interest of the amount of money that you put in on buying, or basically saying, I believe the market is going to go up, but you're not actually buying in on Forex. And so you can be a Forex trader through stocks. And now we have stocks itself where you can actually buy in and, get dividend, all this extra stuff. Like stocks itself, being a stock and shareholder and all that, it outdo all these. Think about it. And the reason why I say this is because all major companies are in the stock market. That's all that needs to be said. Whatever the big boys is doing, you should be doing also. So, but with stocks, you can download Webull, Robinhood, and for anybody that may be in the European side of the country, you can download Trading 212. And like I say, you can get some demo accounts and just practice on those and just learn how it is to hold a stock. Now, going back over trading styles, typically you don't want to be a scalper in the crypto market because crypto gets stuck. It consolidates a lot. And then when the volume is really pumping, it can pump right back up and then shoot right back down and get stuck right back at that same price again. Typically, you don't want to be a scalper in that. Now, I'm pretty sure there may be people that are doing it. And I'm telling you this, those are needle in a haystack people. Very rare you're finding people successful doing that. And when it comes down to making money, you want to be positioned to increase your chances on making money. And that type of style of trading does not fit. Scalping does not fit crypto. Scalping typically does not fit doing that for stocks. Now, there are people doing it, but when you're holding a stock, you're holding a stock. You hear holding stocks more than anything. You don't really hear people saying, yeah, I held it for 2 hours, 30 minutes. You don't hear that. You see what I'm saying? That's not what that style is meant for. That style is not meant for those particular markets. So next thing we're going to move into is another type of trading style, which is called technical, sentimental, and fundamental. Technical is what I use mostly, and that is reading a chart. And I put that over anything. And the reason why I say I put that over anything is because I don't ever look at the news. I don't listen to what other people say when it comes down to what to do in the market, because when you look at that chart, most of the time it is telling you what to do. Looking at the chart is like reading a book. It's like reading a book. You just need to understand the language of the chart. It's telling you what it's going to do. Now, yes, sometimes the news is definitely important because it can cause a reversal reaction in what's going on in the market. Great example, the virus that hit, Corona, the virus that hit back in 2020. When that hit, everything shot down. That messed the market up, but eventually it corrected itself. And then it began to do what it was originally going to do in the first place. But because of that massive impact, that caused a reaction in the market. So yes, news does definitely play a part, but I'm all technical. And when it comes down to stocks, you want to be both technical and sentimental. Fundamental. You want to be both technical and fundamental. So that way you can know what's going on with the company. You need to know what's going on with the company. CEO changes and what's going on with what they do with the employees. It's a lot of stuff. It's a lot of stuff. So when it does come down to stocks, you want to be both technical and news trader. And then sentimental, that is just trading off of what other people are saying. You're trading off rumors. You're trading, and that ain't ever the way to go, because when it comes down to trading, more than 90% of people fail. And trust me, it's higher than 90. So since most people fail, that means it's very likely whoever you're listening to is not a successful trader. And that even includes me. I still have to prove myself to you guys. And if I haven't already, then you'll know if I'm actually in that 90% of people who ain't worthy to listen to. So sentimental style is not necessarily a good style to follow after. And that's your homework. Figure out the style that you want and that fits you right now. Do you want to be a swing trader? Hold for a couple days. Do you want to be a scalper? No less than 4 hours. And like I said, all that varies. You know what I'm saying? Are you enticed by the, man, 5,000, 5 minutes? I can make time for that. All right, cool. Then, all right, boom, you know what to do. Now you need to figure out, do you want to be a scalper in the Forex market? Do you want to be a scalper in futures and options? Now you need to figure that out. And once you try options, futures, Forex stocks, and you're like, I don't really like the Forex. I don't like how this works. I don't like how that works, but I do like the futures. All right, boom. Now you know that you are a scalping futures trader. And now you know how to start looking at the market. You can look at it a little bit different now. And then not only that, it's like, okay, I am a scalping futures trader that likes technical analysis. Boom. Now we can move on. Now a person can really show you and give you advice on how to trade. Even though I'm not a scalper, I still understand I understand the methods. I could still help teach you at least on things to look at on charts. Change of character, break of structure, price action, things like that. No matter what style you have, you still need to know those things. Those are still very essential. So now that you know what type of trader that you may want to be, or you're still trying to figure it out, and then I gave you places to just try out different styles. Now, once you figure it out, come meet me in Grand Lesson 3, where I take you through more technical analysis to help you throughout your journey of trading.